Hi everybody and welcome to this week's ICE commentary for the Russell 2000 and US equity markets. You're speaking with McDonald. Looking here at the Russell 2000 on the daily chart, now what you'll see is we've been consolidating around this level, which is an old line I've had drawn in the chart. We haven't got an extremely precise level. What we have is a bit of a zone there where price is finding support from down around 8.15 up to around about 8.25-ish. Those kind of zones, not absolutely precise points. On the upside, we've got up around about 860 where price has been finding resistance. But all in all, since around about towards the end of March through to now, we've actually just been going sideways. We haven't really been doing anything on this daily chart. This is actually quite good because in lieu of a sell-off, what we've actually got is a market going sideways and giving itself a chance to take a bit of a breather before deciding which way it goes next. A very bearish market after a big increase. So take for example silver. And let's first just have a look at the monthly chart for the Russell. So see how the monthly chart for the Russell has just been going up and up and up, and at that stage it starts to be due a pullback. Now silver was similar. I won't bring up a silver chart, but everybody who's been following it would know silver was going up and up and up. Instead of stopping for a breather, silver had a very, very sharp correction. That's a bearish sign. Whereas here on the Russell, well, the further we went up, and it was nowhere near as overbought as silver was, but as we went up and up and up, the pressure and the likelihood of that sharp correction becomes more probable. What we had instead, though, is instead of a sharp correction, what we've had is just a market go sideways for a couple of months. That is good. That's a sign of a bullish market. Not enough bearishness, not enough selling, not even enough profit takers to push the market down. Not enough fear out there. With silver, there was a lot of fear of, well, this has gone up so fast. Whereas here, stocks have gone up quite fast, but not so fast that people did any kind of panic selling. And we've moved even into a little bit of a downtrend here with lower highs and lower lows on the daily chart. But still at this stage, no panic selling. So without any kind of catalyst for that, it could be an economic event or it could be some kind of macroeconomic event, but something could happen out there which could trigger a sell-off. But as it stands now, I quite like the fact that as we've gone sideways, the market hasn't been correcting strongly, that this monthly chart, even though we're still overextended from the averages, that the averages are starting to catch up a little bit, and it's not looking as overextended, especially now down towards the low of this candle where we are today. If we were up here at the highs around 870 at opposite extremes, it'd be looking very, very different. As it happens, we're about halfway between the high there and the 10-period moving average, and it's actually not looking anywhere near as overbought as it has been, and looking reasonably positive. Then we come and look at the weekly chart and see that this is a line I drew in last week, and these arrows I drew in. In fact, this one here wasn't there last week. So it has been pointing out the higher lows. But what we've done now this week is we've come up and we've made an equal low. We haven't broken lower, which is good. We've come down, we've made an equal low. It's not a higher low, but it's certainly not a lower low. And a lower low would have been an indication of the potential for a change of direction here. And actually, we don't have that. We've made an equal low. We've got a somewhat bullish candle. What I'm looking for this week is a breakup through the high of that candle, and that will be a bullish indication for me. So when we break up through 840, I'll be looking for a breakup to new highs somewhere up above 870 again. So I'm bullish on the Russell based on that. Now, of course, any break below that level completely invalidates it. So any break below around about 812, 813, just checking the lows here. So any break below 813 is going to be a bearish indication. I'd probably want to see it break 810 just to be really certain and decisive. At any break below 810, we've still got a bit of a line of defense there with that 800 level as well. So any break and a close below 800 this week is going to be looking very bearish. So those swaying towards the upside, swaying to the bullish side, looking for a break up through 840 and then a continuation onto the upside. And I think there's a little bit of room left in this to go higher. Just a bit of backup on this trade. I like the S&P chart, and if we have a look here at the weekly, this is of all the cash indices the most bullish of the weekly candles. So what we have here is just a nice bullish weekly candle in that moving average buy zone. So notice all these times we've run up and pulled back to the averages, but we didn't get a small green candle or a small bullish candle. Up and back in, but no small bullish candle. Up and back in, no small bullish candle. We've come up, we've made higher highs, we've pulled back in. We're at a potential higher low, and any break up through here is going to be an indication of a higher low. Therefore, this little blue line I've just drawn, this blue arrow I've drawn in, will be our higher low, and we'll be looking to push up to new highs. So the S&P there, while I'm not trading that, I am trading the Russell, and it's the same kind of setup. I just pointed out the S&P because the candle's even a little bit more bullish on the S&P, and it's a major broad view of the large caps, but if the large caps are going up, there's even more probability of the small caps following suit, and with the small caps here looking strong as well, I think we're looking at a fairly high probability trade. if the S&P and the Russell can both break up through their highs of last week, I think we're looking for a good run up over the next week or two on these indices. Bearing in mind what will invalidate this, any breakdown, I just won't be necessarily looking to trade that breakdown. My preference is to trade the break up, but if we break down first, that will invalidate my long trade and I'll reassess things. But otherwise, that will be where my stop loss would be, down below the lows of this last week. If we did break lower, what kind of trading opportunity could there be? There could be opportunities for breaks down and retests, or any trades around about this 810 to 813 zone that could provide good opportunities on the downside if we did continue in that direction for entry around about that level on the short side. Hope that helps everybody. Happy trading and look forward to speaking to you next week.